consumer.
And layoffs are actually starting, right?
Layoffs?
Right.
Yes. Really?
Particularly in the tech sector, right? It is an important consideration, right? Because if you are expecting earnings to go down
in terms
across
of
the
wages,
economy, right? One of the first things you're going to start doing is cutting your existing job openings. Once you do that, then the next leg to go is actual job cuts. Job cuts. I am not sure how far we are away from that, but
all right. So let's debate that a little bit, right? So we saw the tech layoffs. So Facebook, Amazon, some of the biggest layoffs in their history. But there's one narrative that's emerging that these are highly skilled workers that will find it easy to get jobs in what is a very vibrant job market. And as a matter of fact, it's good for the rebalancing of the economy because, tech had come to dominate the economy. I mean, I think I heard one thing where it was like the hiring post-pandemic was like a factor of 3, and then for one company, and then they were cutting 20% or 13% of their workforce or whatever it was. So the point is, they were still quite tight. So I'll submit the following points, Richardo. We see tech layoffs, right? But those are highly skilled workers, highly paid workers that there's high demand for in other sectors of the economy. And as a matter of fact, when you redistribute those tech workers, you would tend to increase productivity in other sectors, right? That's point one. And then point two, the broader macro data is saying, I have a central bank chair saying to me that there are 5 million more jobs than there are people to fill them. I have unemployment at a multi-decade low. And I have a January jobs report at 516,000 jobs. So on balance, those would seem to be diametrically opposed sets of data. So are you saying that the tech situation is a harbinger of a change in direction, or are we going with the macro data that would leave us more optimistic?
So I wouldn't go so far as to say it's an immediate harbinger of negative things to come in an immediate sense. What I will say though is that when you look at some of the coincident data points across production, income, employment, spending, we're not quite at recession levels just yet. In some of these points we are above trend, some slightly below trend, but those openings that we're seeing, yes, tech is a part of it, but it's not really where the main force is. It's more so you're looking at healthcare, you're looking at retail trade, you're looking at a lot of some of these service areas that would have seen a particularly bad hit during the pandemic. Because if you're working as a waiter during the pandemic, you lose your job or you get furloughed or something, you're probably going to find something else to do in the meantime. And that doesn't mean that when things open back up,
you're going to go back to being a waiter. Yeah.
Right?
Yeah.
So there is that structural dislocation. And as well, based on what's happening from a health standpoint, there is more demand for healthcare workers in that way. So these are some of the areas that are really seeing the job openings pile up. Right?
Okay.
So yes, it may point to or be a sign of some emerging downside on the employment side, but I wouldn't use the snapshot of where we are now to say that things are going to stay that way on the labor and employment side, and by extension the consumer spending side.
Okay, I
just a point here.